Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Monday morning, October 1st, with your grain market morning commentary. Currently, we have corn trading 6 or 7 cents better. Soybeans are about 14 to 15 lower, and wheat's also about 6 or 7 cents lower. In the outside markets, mostly risk on today. The equities are up, the metals, the energies, everything's up. Dollar's down a little bit. And grain markets are still trying to trade off of Friday's big quarterly stocks number. We had a little bit of a surprise, I think, in my opinion at least, that we had less corn stock than what we anticipated. We're looking for about 1.1 billion bushels, and we got a little under a billion. Now, the reason it was a surprise to me is because I thought rationing had taken place. We've been hanging around $8 for a long time, and we saw that weekly export sales have been very disappointing. We've had a whole string week after week of disappointing sales. We've seen ethanol demand week after week going down. And we also saw that feed usage was down, but obviously that's the one place where we didn't get as much rationing as we anticipated. So we got a little bit of a bullish surprise. I don't think we're going back to that 850 level. In fact, it's going to be hard to get back to $8 at this point. There's a lot of competition from South America when it comes to corn. In fact, we have feeders in the U.S. that are importing corn. So that's kind of unusual, but that just goes to show you the price is probably high enough. Now, I don't think we're going to take out that $7 area either on the low side, but prices will probably remain somewhere between $7.25, $7.50. If we had a close above $7.65, that would reinforce some of that bullish technicals that we lost over the last week or two. But we're going to need a close above $7.65 into December corn to get the bullish technicals back. Right now, the fundamentals are still there. They remain in place. But again, it's a long race. We're just at the very beginning of the new marketing year, and we may not need to take out the highs just yet. In the soybeans, a little bit of a surprise there too. We had better carryover stocks than what we anticipated, and the surprise is that we've just had so much strong demand for the soybeans that we expected a lower stocks number. However, we did get some very timely rains at the end of August that helped that crop a little bit. We got a little better yield than what we thought. However, stocks are still historically very low. The yield is lower than what we need to rebuild those stocks, and the South American crop is pretty much spoken for. So at some point, the demand comes back in. Again, just like corn, the bullish fundamentals remain in place. So it's just a matter of time. That market will start to work its way higher too. I don't know that we can say that we have a bottom in just yet. However, the bullish fundamentals remain in place, and at some point, soybeans will probably start to work their way higher as we get through this harvest. We're looking for harvest this week to be reported about 35% complete in the soybeans. As far as the wheat goes, on Friday we did have a little bit of a surprise there too, a little less in stock than what we anticipated. However, wheat, you know how I feel about wheat. It's more of a follower than a leader, at least lately that's been the case. So with the weakness in the soybeans, I'm not sure that corn and wheat have a lot upside at this point, but let's keep an eye on those outside markets too. I'm a little concerned about the health of the overall economy. At some point, again, things are so bad that the Fed has to be so accommodative that that will start to weigh on the market. At the end of the week, we have the big monthly unemployment report. That could be important too. So look, that's all I have time for now. Please feel free, give me a call, 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.